What's going on, YouTube? Today is a very brutal day in the stock market for a lot of us. My account is down around 7% for the day, so I want to talk about that and what is going on, how you guys can profit from it and make the most out of the situation. But before we get into all the juicy content, go ahead, hit the like button and subscribe for me if you guys want to be a part of the most honest YouTube channel out there. Now, I'm calling out dog shit companies when other YouTubers are pumping them. I'm calling out good companies when other YouTubers aren't talking about them. So if that's something you guys want to be a part of, go ahead, hit the subscribe, and hit me down below in the comments. I respond to every comment, so any concerns or questions, be sure to do that. Now, we have a lot of content to cover, so let's get right into it. First thing I want to point out for you guys is this sell-off in a lot of big growth companies we have seen that are up like 100% for the year. There is no news around it. So what that means is institutions are taking profits and taking those profits and putting them into fixed returns like bonds, dividends, stuff like that. That's why we've seen a lot of airlines pop up today. We've seen Disney, which is one of my favorite long-term value plays. We've seen a lot of oil companies go up today. That is the reason for that. Now, with fixed returns and the bond rates going up, that means institutions can get a better yield on their money. So if you think about it like this, and this is always how I like to think about it, if a bond is yielding 2%, for every $1 million, you will make $20,000 a year risk-free for doing nothing. And if you're an institution or a hedge fund or just somebody with millions and billions of dollars in the markets, it only makes sense to sell some of the overvalued stocks and move to undervalued stocks, value stocks, and bonds. So that's what we're seeing. When the bond rates go up, people are going to start moving out of growth into bonds. But this is not going to last forever, and I do not want you guys to be fooled thinking the market is crashing, we're going to lose everything. None of that. That's not going to happen, and it will rebound on the same trajectory as what it was prior. And that is my opinion on what is going on and what is happening. But that is why on this channel, I really tell you guys to come to your own conclusions and really have peace of mind with your decision, because it could keep going down, it could rip up tomorrow. You never really know, and if you're not confident in your decision, then you will not make the best decision and it will cost you money. Like you guys already know though, on this channel I do not give financial advice personally. I'm not a financial advisor. I should have said that in the beginning of the video, but I'm saying it now. Just don't copy me. But I put my money where my mouth is, so if I talk about something, I'm going to show you that I actually did it. So that's what I'm going to do next, is show you guys what I'm doing, how I'm going to profit and make the most out of this situation, and potentially how you guys could implement this in your portfolios so you guys can make the best out of this situation. There is a couple ways you guys can play this and make money. If you have a lot of highly volatile stocks and big positions, like I have 20% of my account in NEO, around $5,000, I could buy puts on it and make money that way because it dropped so hard today. But I am not really buying puts right now. I am looking to add to shares, and I am actually playing the value rotation stocks. So I bought some leaps in the airlines, which I'll show you guys. I did buy a Pltr call, and these are all leaps. These are all January 2022 contracts. I actually bought a NEO $70 call for September 17th because it had lost about $250 in value before I bought it. I bought this at $850, so I lost $40 essentially on the play today. But the reason I'm going for so much time is because I don't know if this sell-off will last 1 day, 1 week, 1 month, 3 months. I don't know how long it will last. And I don't want to put up a significant amount of capital because premiums are still so high that if this lasts 3 months, I will get clapped because I'm buying April or May or June contracts. I'm not going to do that. I have faith and confidence in these companies. And now I'm going to show you specifically the trades that I placed today and what I plan to do with them and when I plan to get out, how long I plan to hold them, all that good stuff. So now let me point out the reason why I bought this $70 September NEO call is because it had opened up at $1,050 when I bought it at $850. Subsequently, it lost $200 in value from the point it opened today from when I bought it. And NEO was down around 7% at the time. It closed down 8.18%, which is a major overreaction. Now, what I plan to do with this is if we run up into earnings on March 1st, which I don't think we will, then I will look to make it free and ghetto spread it and take some profits, whatever, play the spread. If we sell off into earnings, depending how far we sell off, I will be looking to add another contract to this play. I'm probably not going to go too crazy because most of my portfolio is in NEO, but when you see major overreactions like this, down, what is it for the week, 16.30%, you have to take advantage of it. You'd be a fool not to take advantage of a good company gapping down every single day. So another thing I want to point out is NEO is at its major support level around $50 a share. Like, it is seriously right at that. So I expect we're either going to gap down further or we're going to consolidate out or go up. I think this is a major reflecting point because the next support level is going to be around $44, $45. Overall, I think NEO will bounce off of its $50 support level and consolidate around $51 to $53 until its pre-anticipatory run up until earnings. Whether that's down or up, it is too early to tell because that has not happened yet, in my opinion. But taking a look at the second trade I made today, and that is AAL, American Airlines, $27 call for January 21st, 2022. And really my only logic behind this was, one, play the value sector. Two, that the stimulus package has $14 billion in aid to airlines, so that should help overall. And then most importantly is that if we pull up the year chart, we can see we are at the same level, slightly above by about 10 cents as to where we were with when the first stimulus package passed June 8th at $20.31. Now we're at $20.47. So I do like the bullish trend going forward. I think we could consolidate out a little bit here and then push up once the stimulus package is approved and passed. I bought these American Airline $27 calls at $355. So depending if they go to $710, I would sell one, get my initial investment back, hold the other one. If they don't, if they only go up 25 to 30%, I will look to ghetto spread them and then really get my initial investment back. That's my whole strategy right now, is to play these moves, make money on it, but make sure you get your initial investment back. So it essentially becomes a risk-free trade. The third and final trade that I made today was a Pltr $35 call for January 21st, 2022, and I bought in at $845. I've lost $50 on the trade. I am not concerned about this one whatsoever by any means necessary. Now, when we take a look at why I actually went with this contract and this specific price, because I think Pltr by this time next year will be $60, $70, $80 a share. My personal opinion. I'm sure a lot of you guys might agree with me. But ARK Invest and Cathie Wood just bought a significant position in Pltr and had some very good things to say. She said, in quotes, that going forward in the American economy, it is going to be a winner takes majority market share type environment. And she said that's the reason why they invested in Pltr, is because they are investing in themselves for the future. That she doesn't want to see profits and dividends now. She wants companies to seriously invest and build for the future to one day do those types of things. Now, another reason why I did this is because we can see, pulling up the month chart, we are down 22.21%. That is a super overreaction, and we are bound to bottom out and rip up at some point. And we can see Pltr was $43.24 January 27th, so a little bit less than a month ago. It's almost lost like half its value, damn near. And that is a super overreaction, like I just said. But if you had this $35 call, right, you'd be in the money at this point for $824. So this contract at that time, I hate how Robinhood don't let you see that far back in the contract's history, but this contract was probably worth $1,500-ish at one point. So there is tons of room for this to go up and for this to start running. When ARK Invest and Cathie Wood invest in a company, I like to say it's the ARK effect, and it subsequently drives the share price up. But sometimes it takes a couple days or even a couple weeks, and people really start to realize that, hey, this is a good company, and subsequently you see the stock price start to follow that. Following the pullback in these hype stocks, a lot of people are invested in that have went up significantly this past year, I am looking to add to certain positions like AMD, a couple other ones, but I'm not going to go too far into that. What I did before this and thankfully I did this, was I sold a lot of options, I took a lot of profits, and have a significant amount of cash on hand. With all these trades that I made today, I still have $3,000 in cash. So I had around $5,000 in cash. Now I have around $3,000 in cash and look to build out some of these positions. I might use some of this money, depending how bad I think this will go, to hedge my Neo position, a couple other bigger positions. But that's really all I'm doing right now. I would not get too shook, but if you have the ability, I would keep cash on the sidelines and slowly leg in and buy in, while also paying off some margin if you have a lot outstanding and you're in risk of a margin call, because you always want to be prepared for events like this and never want to have too much margin outstanding that you could not, one, cover it, or get enough money through your bank account or whatever to handle a margin call if that were to happen, because nobody likes selling winning stocks when they go down because you're on margin. So if you guys did get anything useful out of this video, and if you guys want to give me your opinions down below in the comments, I respond to every comment like I said in the beginning of the video. Hit the like button and subscribe for me, all that good stuff. You guys know the deal, but I will see you later. I hope this helped you guys. Peace out.